643. This is 1320 WILS. The market's rebounding today, but are they really in good shape? What's happening economically? Let's talk to Clark Hodges, a man that's been dealing with the markets for many decades, a financial strategist at HodgesCapital.com. Clark, great to have you here.
Hey, great to be on again. Thanks for having me.
Did you ever get nervous about the state of the markets and the economy?
You know, I kind of fall in the camp that the markets near term are very schizophrenic sometimes. We've definitely had a schizophrenic first 6-7 weeks of the year. The last few weeks have been a little bit better. They felt a little bit more normal. But when you look over the long haul, basically the stock market goes up over time, 2/3 of the time, and 1/3 of the time doesn't. So it trends up, and it keeps going up, and you know, it'll eventually get to 20,000, 25,000. It's just a matter of time, you know.
I saw, before we got on the air, the Wall Street Journal, I just read quickly this article titled, "The Markets Have a Message, Don't Believe This Rally," basically saying that we're not seeing sell-offs in things like the yen and gold and the Swiss franc, and that points to the fact that this isn't a true strong rally. Do you agree with that?
No, not at all. I think that is pure, just one person's take on what goes on in the market. The market is driven by earnings. And the 30 stocks that are in the Dow Jones, they're going to be driven by earnings. And if 2 years from now they're making more money than they are this year, those stock prices will be higher. If not 100% of them will be higher, 80% of them will be higher. And the S&P 500 is the same thing. So what moves the market tomorrow could be as mundane as, you know, a political vote, Trump's campaign manager gets in trouble, anything like that could move the market. But the fact is that over time, the weight of earnings is what increases stock prices, and that's what people need to be focused on because
and how are the earnings
that's where
looking?
You really make money.
Yeah, how are they looking like? How are the earnings at the moment? What would you say?
Fundamentals are very good by and large. We invest in small caps primarily, so they're all domestic stocks that are not affected by China, not affected by Greece, and not affected by a strong dollar. So generally speaking, fundamentals are very good. A lot of the stocks that we invest in have been taking a hit primarily because the energy prices, the oil price going down. Being in Texas and owning anything in Texas has been hard to stomach because the perception is that Texas-based companies, home builders, banks, what have you, are going to be really in a recession because of the energy prices.
Is that what's happening?
Oil prices. But that's not the case. I mean, I'm in Dallas. We've got Toyota National North American headquarters being built here. We have a lot of companies moving here from California. Last year, the statistics were in Dallas-Fort Worth, we added 160,000 people to the Metroplex.
It's a booming.
We've got a great economy here, but
booming
if you
city.
own anything Texas-related, you've had a really bad time.
So what is ahead for the energy sector, do you think, this year?
I think the energy sector this year will be turned into a value play, and you'll look and say, you know, there's some stocks that got hit too hard. There's some companies out there that can make money at not only, you know, $40 a barrel, but they can make money at $35 a barrel. So if energy prices, if oil prices stay the same, go up a little bit, go down a little bit, they can make money. Then you'll start to see the notion of energy stocks being a value play, and I think that's what will end up happening.
Talking to Clark Hodges, financial strategist. Janet Yellen today said that the economy, quote, had proven remarkably resilient, and she said the Fed does expect better days ahead. What do you think that means for the interest rate? What are we going to see moving forward?
Well, I think based on their last Fed meetings minutes that they said, you know, probably at the most 2 moves upward this year. You don't end the last year with a move upward without having as your goal to start moving upward going forward. So I would say you're at least going to have 1 this year.
Is that your perception that the economy is in a resilient state right now? Mine,
no, I don't feel that at all. I feel like we're in a very slow recovery. and we're being slowed down by Obamacare, or we're being slowed down by regulation, or we're being slowed down by the potential of importing trillions of dollars of corporate America's money from overseas back into our economy.
Yeah, but any of that likely to change?
No, I don't think any of that's likely to change anytime soon.
What about the job market?
It's an election year makes it a little bit more interesting. If it's perceived that a Republican who's business savvy or pro-business is going to get elected, then I think that might help the market.
Yeah. Are you a Trump fan yourself? Or?
I am fine with him. I think he would get a lot done from a negotiation standpoint. I believe that he couldn't be where he is in life if he didn't have the ability to bring people together and get things done, which is the exact opposite of any politician. And the fact that he doesn't have that politician filter to what he says, he does say some stuff that you think, well, what a buffoon statement that was. Mm-hmm. But the fact is he's not a lifelong politician. I think that's his greatest asset.
And what about your own Senator Ted Cruz? Do you prefer him to Trump or no?
No, I don't. I get a Richard Nixon feeling when I look at him in the eye. So no, I don't like him at all.
No kidding. So you didn't vote for him yourself there in Texas?
No, I didn't vote in the primary. No.
The 4.9% jobless rate we have now. What does that tell you? What kind of shape are we in that way?
That number is a little bit misleading. I don't think that the job economy is that good. I think there's a lot of people that taken themselves out of the equation, and there's a lot of people that if the job market were to get better or better jobs were available, they'd get back in. But I think, and that would show us them having a higher unemployment. But I think the jobs that are being taken are not your high-quality jobs, and I think that's one problem with the economy. And when you have Obamacare and a full-time employee is going to have to be it's going to cost more to hire that full-time employee, you're going to have a lot of part-time jobs on the market, and that's what I think most of it's made up of here lately. The gains we've had is part-time stuff.
Clark Hodges, financial strategist. Find him at hodgescapital.com, based down there in Dallas, Texas, where it's always hot down there, right?
Yeah, well, it is. We've had a really good winter, so we hadn't had any of that cold, wet, snowy stuff.
Yeah, probably better in the winter. In the summer, is it a little unbearable to be down there?
Oh, man. Just hell, nobody in your audience should come down here in August. It's horrible.
Because you're like landlocked, basically, right? And it's incredibly hot. And
there's a ton of cement in Dallas, and it just makes it even that much hotter.
You just start sweating as soon as you walk out the door? Or?
Oh, you have no idea. You sweat overnight. You wake up in the morning in August, and it's 85 degrees, and the humidity is 95.
You got to keep your jacket on in the office, otherwise they might see you sweating. Clark Hodges again, hodgescapital.com. Clark, thanks.
Thank you. Have a good one.